Good morning, Oracles. Well, it looks like the gap up that we were expecting from the Twitter termination by Elon is going to be subdued a little bit due to some new fears over in China about an Omicron subvariant. Plus, we've got some uncertainty behind CPI and PPI data coming out this week, and then more uncertainty going into Q2 earnings. So the indices right now are down between 0.5 and 0.75% to start the day. Tesla's still up almost 1% at 759, but that's been pulling down rapidly this morning. We'll see how today trades, not really sure just because of all of this uncertainty. But today I wanted to go over some potential ranges that Tesla can be trading in over the next few months. Again, for long-term investors, this isn't anything major to follow. I know some of you on here do swing trade within your IRAs, some play options. So these are just some ranges that I am foreseeing that we can possibly be trading in. Now, again, I think because of the macro environment that we are sitting in right now, pretty much everything is going to be range bound. Tesla is going to be no different. Tesla is not going to have anything that's truly going to break them out of what the macro range is going to be in. The only thing that could happen is based on Q2 earnings or some other news, the range may shift a little bit. So I'm going to go over those numbers a little bit right now. For the last 2 months, Tesla has been trading in a range from about 620 up to 770. And we saw us bounce right around that 770 mark after hours on Friday. So that's the range that we have been stuck in for the last couple of months. And I have a feeling that Q2 earnings are going to shift that along with whatever happens in the macro environment. And so the first thing I'm looking at in the macro is a lot of people are talking about the S&P pulling down to 3,400. I don't know if this is going to happen or not, but to play out that possibility, the S&P falling down to 3,400 means that it's going to be pulling back 13% from where it is right now. And so if Tesla pulled back 13% from where it is right now, that would bring it down to about 670, which would fill that gap at 695. Now, Tesla does trade at a beta of 2.0, which means that it's usually twice as volatile and moves twice as much. So a 13% move in the S&P could mean a 26% in Tesla. If that's the case, that would bring Tesla down to 570. And now Tesla does technically have a gap that goes down to 563 that stems all the way back to May 19th of 2021. Now gaps fill 9 out of 10 times. This gap does not need to fill. It's a long time ago. So maybe it does, maybe it doesn't. If we do pull down that far, maybe we pull down a little bit further and fill that gap. Again, lots of uncertainty and unknowns there, but that's just a potential if we end up pulling down that far and the S&P pulls down to 3,400. And now my initial thoughts with Twitter were we were going to have about a 10% overhang when it came to Twitter, so we would kind of shift up because a lot of people were pulling back 10% based on that news. So if we ended up bumping up 10% in Twitter, that would end up putting us around 847. And so a 13% drawdown from there would put us at 737, and a 26% drawdown would put us at 627. And 620 has been the bottom. So if that ends up playing out, that could solidify 620 as the bottom. So again, this is just that range that would be trading within the macro based on the Tesla specific news that we have. Now there is a gap up to 865, so my thoughts were with the Twitter news, if the macro wasn't pulling back right now, I was anticipating us climbing up a little bit higher and potentially filling that gap at 865. So not to say that that would be the top of the ceiling, but I think what it's going to come down to when it comes to these ranges is Tesla's fundamentals are going to determine what the floor is, and the top range may kind of pop a little bit here and there and may get some spikes out of it. But truly, I think the Tesla-specific information is what's going to hold the floor. And the most important piece of that is going to be coming in about 10 days from now on July 20th when we get the earnings for Q2. Now, analyst consensus right now is around $1.80 to $1.89, depending on who you're talking to. Now, 3 months ago, we were at $2.45, but that was prior to the Shanghai lockdowns and other information that we had gotten from Tesla about, burning billions of cash in the ramps going slower than expected, the $500 million Bitcoin impairment. So in due time, that has come down and it dropped down to $2.11. Now we're at that $1 to $1.89 range. Personally, I have them at $1.73. I think it's going to be a miss, but technically some of the consensus analysts haven't even updated their forecasts yet. So that analyst consensus is a little bit inflated because some people did not update their estimates. So I'm in $1.73. Some people are lower, some are higher. I will keep you guys updated over the next 10 days as things adjust and change, but that's currently where I am at. And that I think is going to determine what the floor will be for the range. So we have to follow the macro and then follow Tesla specific, and that's where we're going to find the range that we will end up trading in. And I think one of the concerns, and not really a concern so much, but based upon the fact that we are in a PE compression environment right now, and Tesla is pushing up to that 100 PE ratio place, I think if we end up getting earnings that are going to come in with a lower EPS than Q1, that is naturally going to trigger algorithms to drop the stock price. So a lot of people are wondering what's going to happen after Q2 earnings. I never play earnings because you never know what's going to happen. You can get good earnings and the stock sells off. You can get bad earnings and the stock goes up. You can get a meets earnings and it goes up or down. And it's so hard to understand and figure out what's going to go on. But strictly looking at the PE compression environment that we are in, where Tesla was pulling down to that 60 PE ratio range, if that's the case, and we're pushing 100 right now, and the EPS drops significantly, that could in turn cause the stock to pull back down. And the way you calculate PE ratio is you divide the share price by the earnings per share, or the EPS. So in Q1, we had $2.86 EPS. So if we end up pulling back for Q2, which is most likely going to happen, we are naturally going to have a much higher PE ratio, which in turn could cause that compression to come down and the stock to sell off, strictly based upon the fact that we are in that PE compression environment. And now some people calculate PE ratio differently. Some use a trailing 12-month PE ratio based on all of the quarters that we've had previously. Others do an annualized based on this quarter. I usually do an annualized based on this quarter. Might do it differently this time just because we know this is a hiccup in the road and not really true to what Tesla has been doing. I'm going to play out both numbers and I'm going to look at it in both lights just because it's important to look at it in both ways. But that's usually how I do it, is an annualized based on these because the company is growing so quickly. Now, as far as I am concerned, this to me would be a great buying opportunity because we know that the EPS is going to be lower because of one-time issues that we had out of Shanghai, the ramps that are going slower in Berlin and Austin than expected, the Bitcoin impairment. So all of those things are going to be gone by Q3 and Q4 most likely, and unless there's any other massive macro environment events that come up, should be good. And then we should be able to actually, in Q3, surpass the EPS that we had for Q1. So this would be a nice little dip that we're going to get for a buying opportunity in the stock based off of these numbers, if that is what plays out. So that's just how I am viewing it. And again, this is where I will be buying heavier, and that'd be a great opportunity to buy ahead of the split. So if we're going to be getting this split coming up most likely, and we'll find that out for sure on August 4th for the annual shareholder meeting, that could in turn present us with a wonderful buying opportunity ahead of the split. And then post-split, we'll most likely get a little bit of a sell-off as well. And then again, lots of uncertainty in the macro environment. I don't think the S&P is going to be pulling down 13% over the next 10 days. That could be drawn out for several months right now. So we might not actually see this range of Tesla shift until after the split. Totally possible. And again, if that does end up happening, all you do is you just take the numbers and you divide them all by 3. That's really all it is, because the valuation does not change when it comes to a stock split. So it's just straight math divided by 3, that's all. And then going forward, after Q3, Q4, most likely Q4 is going to be Q3 with EPS. And then going forward, we'll probably be climbing up. And then don't forget, a PE compression environment does not last forever. Could last a couple of years. Sounds like some people believe we could be going through this until 2024. If that's the case, that just means we have that long of an opportunity to continue buying, because inevitably we are going to go back into a bull market where PE compression isn't as strong and it will allow the stock to run away again. So again, just looking at things long-term as a long-term investor, these times right now where we're suppressed are amazing times to buy because you're buying when everything is basically on compression sale. And if you're looking at a compression sale, that's when you buy before the stock does, the compression goes away and we can take off and get some really nice running room. And this weekend I will be going through some tighter numbers, and I'm going to take a look at a lot of other people, see what their analysis is of the stock, run my numbers again, kind of finalize some things to come up with my final EPS. But as of right now, my estimate is going to be $1.73 for EPS. And then we just take it from there. And then maybe we'll get enlightened to some more information on the Q2 earnings call. If not, I have a feeling that we're going to get some good little nuggets of information at the annual shareholder meeting. Let me know your thoughts in the comments below. What are your EPS estimates for Q2 earnings? Do you think we're going to meet the expectations of $1.80 to $1.89? Or do you think we're going to fall short? How do you think the stock is going to trade? Now again, for me, it's always a coin flip. But again, maybe you guys have some different insights as to what you think could happen, and I'd love to hear your thoughts. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We also have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, you can join us over on Patreon. That link is also in the description. Thank you so much. Have a great one.